Welcome to this week's weekly technical analysis. My name is Joel Chandran, here with Train to Invest, where we'll be covering the TSX, Focus 5 stocks, briefly covering oil, gold, silver, and several related ETFs. With the short week, trading was a bit more volatile than usual, just due to the lack of one day. We also have to worry about the whole situation in Syria. But overall, the TSX had a positive week. On the 3-year weekly chart, you can see that the bar was long, and more importantly, we closed higher than we opened. A very good sign. The MACD and the MACD histogram both show a positive sign. Histogram bars are quite small, but they are still positive, and the divergence between the MACD and the signal line is growing, which is what we want on the positive side. So that is showing that it is strength is there, investors are there, and that's what we want to see. RSI and Stochastic both are up. RSI is a little less persuaded that momentum is there. Stochastic is taking in the last couple of days, and it likes what it sees, so it is a little bit steeper. Taking a look at the 6-month chart, 6-month daily chart, you can see 1, 2, 3, 4 days here. Tuesday was a bit of a very positive day. Friday we did close lower than we opened, but that's okay. We still stayed above 12.8, which is very important. The MACD still positive. Histogram bars are small, but they are growing. Another good sign. RSI starting to head down a little bit, and that's due to the Friday's lower close, as well as Stochastic with it crossing down. Again, Friday's lower close has obviously the momentum is leaving. So overall in TSX, things are looking good. We had some good appreciation this week from 12.65, 12.7, above 12.8. So good growth overall throughout the index. This is what we want to see. This is the Toronto Stock Exchange versus its indices. I listed the major indices. There are a few which are minor and I didn't put on here. But everything starts at the same point 6 months ago. And now we can see that the black line here is the TSX. Anything above is overperforming, and anything below is underperforming. So we have the consumer discretionary overperforming by 18%. Consumer staples are up by 13%. Energy here is green, up by 4%, and financials in orange up 5.2%. So this is where you should be looking to make your profitable trades. This is where the money is at. And so if you focus on these sectors, you will definitely find some winning plays. This is a 6-month daily oil chart. As you can see, over the last 6 months, oil has increased by $19.82 or 21.92%. A huge increase over the last 6 months. So if you had just bought an oil index, you would have seen a massive increase over the last 6 months. And this is obviously due to the situation in Syria, where President Obama has got the Congress to pass his plan. Now it's up to the Senate. So we could see next week and the week after, combined with the bond tapering situation, a continued ascension for the price of oil. Now looking at Enbridge, the 3-year weekly chart, you can see that it closed lower than it opened for the week. However, what I'm happy about is that Friday's close is higher than the weeks before. You can see we've had 1, 2, 3, 4, 5 days of falling closes, and now we've seen it turn up. Well, we had 4 weeks of falling closes. Last week was higher, and this week is higher as well. So we could have seen Enbridge starting to turn around here, reach support, did not break through, which is good, at 42.50. Instead, turned higher, which is what we want to see. So we could be seeing some positive movement in Enbridge over the next following weeks. MACD is still saying stay away, but the signal that the MACD line is starting to turn. Histogram bars, while negative, are staying the same. So that's a positive sign. RSI isn't so convinced about the momentum, but it's still flat, which is okay, better than it going down. But Stochastic is showing positive growth in the momentum side of things, which should translate well for the rest of the week. Looking at the 6-month daily chart, Friday's close higher than it opened, what we want to see. Indicators are all looking positive. The MACD is turning higher. Histogram bars are growing at a greater rate, so that's really good to see, especially that it's on the positive side. The strength is there. Momentum is there. Stochastic is loving the appreciation of the last couple of days. RSI is also higher, so it's a good sign for Enbridge. I would expect next week for the stock to make the gap between its close and 44, potentially even breaking through as momentum continues to stay with the stock. As you can see on the RSI here, there's still a lot of room for it to move between where it's at around 44 to the 70 mark. So there's a lot of room for appreciation, and with some strong momentum, you will be able to see that growth once again. Remember, came back down, ran all the way back up to 47, came back down all the way back down to almost 42, so we could hopefully see that appreciation up to 47 or even up to 49 again if the conditions are correct. But before we can get to 49, we have to reach 47 and then fill this gap that it gapped down several weeks ago, months almost now. Imperial Oil, 3-year weekly chart. We pretty much closed where we opened. So I'm not too concerned, but we did break through 45, which is good. I would have liked us to close above 45 or at least closer to 45, but that's okay because the MACD and the MACD histogram are still positive. The histogram bar is pretty much level where it was last week, and that's good. We're continuing to see 1, 2, 3, 4 weeks of higher closes. Good sign. RSI is really showing the positive momentum there as it's taken the broader range. And Stochastic, while not as sold as the RSI, still the blue. We are at an inflection point, but I would expect that to continue to turn higher as oil prices continue to rise. Looking at the 6-month daily chart for Imperial Oil, Friday was a big down day. You can see we closed beneath 45, much lower than we opened. And if we just closed somewhere anywhere close to 45, it would have been showing a much better week. But there was a lot of volatility on Friday. MACD still positive, and you can see the histogram bar is declining. And obviously, with such a big down day on the Friday, momentum has pulled away from the stock. Could be potentially a good entry point here, just above 44. You may want to make sure that it doesn't break through first before you get in. But with Monday's open, we should have an idea of where the stock is going for at least the rest of the week in general. I would expect a bit of volatility due to just the movement that it had on Friday. But again, I would expect, with oil prices rising, for IMO to do well once again. Here is Suncor. We have the 3-year weekly chart here. Another great sign, closed higher than we opened, and again, higher than last week. So that's very good. MACD is very positive. Histogram bars, while aren't growing or staying the same at least. RSI and Stochastic both green. Strong momentum as we come up to this 3750 mark. Now, I'm a little concerned because we've come here before and then immediately went all the way back down. Excuse me. Again, oil prices will be a huge asset for this stock to continue its run higher. If oil does continue to move higher, Suncor, especially with its Petro-Canada assets, will reap benefits from both the price appreciation of Brent and West Texas Intermediate. So we'll have to wait and see, can Suncor continue its stellar run over the last several weeks? I have a feeling that we're going to feel some strong resistance here at 3750, next week, and we could see it head lower. But again, looking at the chart, everything looks very positive. 6-month daily chart, we can see that it closed higher than it opened on Friday, and for the week, it was definitely the highest point was on Friday. So good volatility there. MACD not quite so sold. As you can see, it's pretty much even with the signal line. The histogram bars are slightly above 0 or at 0. So not a whole lot of news there, but that's because we are hitting near the highs. RSI, again, I could have given it a green. It is slightly rising. 37 will be a major mark for Suncor, as it's been the highest it's been in the last 6 months. So you know the stock has been on quite a tear since July. So the last 2 months and a bit already, we've seen quite a strong capital appreciation. Stochastic showing the growth on Thursday and Friday. Again, the open will set the tone for the stock, I believe, for the rest of the week. Looking at the financials, this is Royal Bank's 3-year weekly chart. As you can see, a new 52-week high. We closed higher than we opened. Again, positive signs on the MACD, RSI, and Stochastic. MACD heading higher as the histogram bars are increasing. So obviously that is a great sign for the stock. And RSI and Stochastic are both showing the momentum is there on the weekly side of things. A big jump this week. If you look at, for example, it closes pretty much at 65, almost reaches 67.50 this week, so at least a $2 increase throughout the week. So a lot of appreciation, a lot of growth. And is Royal Bank done? According to the weekly side of things, no, there's still room for it to grow. We are reaching close to the 70 mark here. And on the Stochastic, we are coming close to 100, but in an uptrend, that doesn't matter. Looking at the 6-month daily chart of things, a bit of a different news. It hit through 60, almost touched through 67, but closed lower than it opened on Friday. That's some of the momentum coming out of the stock as it did hit its 52-week high. As you can see, Tuesday was good. Wednesday closed higher. Thursday closed higher, so it was a strong run up here. And then Friday had a bit of a lower close, but that's to be expected after trying to break through 67 and coming back down. MACD looks good, showing signs of the growth, which is good. RSI, less bearish or bullish on the stock. It has plateaued here just under the 70 mark. And that's to be expected as it continues in an uptrend. But Stochastic is pulling away as it's heading down. But I believe that's just due to the Friday. I would expect a little bit of a sell-off for Royal Bank next week. Maybe come back down to 60, maybe even break through 66 before turning back up again. As you can see, 65 is definitely a layer of support. But below that, 64 is a much stronger line of support as well. So will Royal Bank be able to keep its ascension going? Not 100% sure. We did have the Bank of Canada say interest rates will stay at 1% for the foreseeable future, at least in the short to medium term. And that obviously has helped the stocks move forward. Looking at TD, again, 52-week high, the highest it's ever been ever. Just looking back at the 3 weekly chart. Closed higher than it opened. Again, very strong. Again, we have 1, 2, 3, 4 weeks of higher closes. Stochastic and RSI are both showing strong signs of momentum. And the MACD and the MACD histogram are showing very clear signs of an uptrend here. Big growth here. Histogram bars are increasing. Looks very good on the weekly side of things. So both our financials for the Focus 5 have been very strong over the last couple of weeks. Will they be able to keep their appreciation higher or continuing this uptrend? I'm not so sure, especially because they're hitting new 52-week highs. On the daily side of things, again, just like Royal Bank, TD closed lower than it opened on Friday. It hit 52-week highs, came back down, and 90 to 92 is a very, very tight or strong range for the stock. Again, new territory. MACD is still positive, but obviously the RSI and Stochastic are showing that negative drop because of the lower close on Friday. Again, I would expect it to come closer to 90 before turning up again, but I would be careful to just assume that. If it hits 90, you may be interested to be an entry point, but I would wait until it turns up again before getting in. There is definitely potential for it to break through 90 and come back down to 88, which is a minor level of support, and there's a stronger level of support at 86. So a drop from 92 to 86 could be coming over the next couple of weeks, but I would expect a drop towards 90 before turning higher. Here is the price of gold over the last 6 months. We've definitely seen a recovery in the price of gold since July. We've gone from 1,200 to just around 1,400 over the last 2 months. But overall, the last 6 months, gold has dropped $184 or 11.72%, which is a much better number than the 22%, 30% that we saw back down here. So you see the appreciation. There was a bit of a decline throughout the week before turning higher, and that will be reflected through the equity prices for the ETFs. CGL, the iShares Gold Bullion Fund, as you can expect, a bit of a decline and then turned higher. Not a ton of movement, but movement nonetheless. We do have a MACD crossover to the negative side, not what we want to see with the histogram bars shrinking and even becoming slightly negative here. But RSI has turned higher as it rebounded on Friday. And we do see the Stochastic heading towards an inflection point. And I would expect with the continued tensions in the Middle East, along with the potential bond tapering, for gold to start and continue its appreciation over the next several weeks. So we will see this ETF turn higher. Our Gold Bull Plus ETF, HGU, same kind of fate. Still really didn't turn higher over the last couple of days compared to CGL. MACD crossover already happened, but the histogram bars did become negative on Thursday and Friday. Not necessarily a good sign. RSI is flat. It doesn't move a lot, but it's still moving in the wrong direction. But again, that's because it's the Bull Plus ETF. Stochastic did turn around. It is negative, but it did turn around, indicating that over the next couple of weeks, momentum could help move this ETF higher. So if you're looking to get in, now might be the time to catch it on the uptrend. As you can see, it definitely went from 8 to 14 in a very short period of time. Could come back down towards 10 and then up to 12, so that's $2 right there. But again, you have to be very careful and watch the stock daily. HGD, the Gold Bear Plus ETF, didn't see the appreciation that I would expect, but it still made more than $1 over the week. MACD and histogram is higher, which is showing signs of growth, but RSI is heading down. Stochastic, while green, is heading down towards an inflection point. As long as gold continues to appreciate, this ETF will suffer. So I would expect it to go back down towards 15 over the next week or so as gold continues to appreciate. But if gold prices start falling, this would be the place to look to take advantage of that. Finally, silver has fallen $4.71 over the last 6 months, or approximately 17%, closer to 16.5 at 16.48. But again, strong appreciation in the last couple of days. This is the 6-month daily chart. Didn't really move much here, but middle of August started to take off. Has pulled back somewhat, lower lows here, but again, hopefully we see some stronger appreciation over the next couple of weeks. iShares Silver Bullion Fund, SVR. Kind of all over the place. We did have that downwards pullback, but again, recovered on Friday. MACD is negative, and again, histogram is barely negative. RSI, however, and Stochastic crossed over, RSI turned higher, showing that momentum is there. Again, as long as silver continues to appreciate, this would be a good place to park a few bucks, just take advantage of the inflation savings as well as some appreciation. But tough time breaking through 15. The first time it's broken through 15 since May. So, or sorry, 14 since May, and a long ways to go towards 15. So it could be in this overbought position, but if silver continues to appreciate, the ETF will reflect that. HZU, HZU. Excuse me, HZU. Silver Bull Plus ETF. Again, Friday showed the biggest increase because of the appreciation on Friday. MACD is still negative, but just like SVR, it is showing positive signs on the stochastic and RSI. We have a stochastic cross here, which is a good sign. RSI has definitely turned sharply higher. So the MACD will eventually follow. Again, very tough time breaking through 12. Hasn't broken through 12 since before May. So that was a while ago. But again, even after it broke 12 in May, long ways to go towards the gap up to 14. But again, things are different right now. We still have the European debt situation. We have Syria bond tapering, so we could see a movement in precious metals. Finally, last chart for the day, Silver Bear Plus ETF HZD. Again, even though we did have the MACD crossover that was earlier in the week, RSI and Stochastic both, we have Stochastic crossed down, both showing decreased momentum. Again, with silver rising, this ETF is going to suffer. With both gold and silver beginning to appreciate further and further, the Bear Plus ETFs are going to suffer, and I think that they may be falling out of contention for a while, at least until we have more clarity on Syria. So that is it for this week. I hope you found it very helpful. Please email me any questions, comments, concerns. Thank you. Big shout out for those who have done that already. I appreciate the communication. Check us out at www.tradingtoinvest.com. We do have new classes starting up on Monday. We have a 7 p.m. class starting up all the way through Mondays. And then on the 18th, we have an 8 p.m. Central Standard Time class starting up. So check us out on the website. If you want to get in on that, please let us know, and we'll send you relevant information. And again, good luck with your trading, and we'll talk to you next week. Bye now.
The organizer